This is wild, and you'd want to hear this. Global financial markets are feeling the heat as President Donald Trump's new import tariffs spark concerns about where the economy is headed. The S&P 500 looks set to keep sliding, with futures pointing to another rough day. Amazon's taking a big hit in pre-market trading after its earnings fell flat, putting a dent in the confidence that's been propping up tech giants. The MSCI All-Country World Index is also on a losing streak, marking its longest drop in almost 2 years as trade tensions ramp up. Trump's rolling out tariffs that put a base levy on imports worldwide, with steeper ones for countries that sell more to the US than they buy. Canada is getting hit especially hard, which is stirring up trouble with a key neighbor. While the tariffs aren't as harsh as some feared, their unpredictability has everyone on edge. This is a big shift for global trade, said Kim Huacker, an associate consultant at Camarco. With all this uncertainty, it's tough to see how sky-high stock prices, especially in the US, hold up. Europe's not faring much better. The Stoxx 600 index has slipped to its lowest point in a month, with drug companies like Novo Nordisk and Sanofi hurting after Trump pushed for cheaper US drug prices. Europe's in a tough spot, said Ludovic Subran, chief investment officer at Allianz SE. The US is a huge market, and these tariffs could really squeeze businesses. The fallout's clear: higher costs, strained trade ties, and a cloud over global growth. These tariffs could shake things up big time. Markets Live strategist Garfield Reynolds says they're likely to slow down trade and growth, dragging stocks off their recent highs. The way these rates are set feels random, and that's making everyone nervous about what's next, Reynolds added. With markets jittery, the dollar's climbing, and treasuries are holding steady as investors look for safer bets. Everyone's now watching for today's US jobs report, which could either calm things down or make them worse. Word is, hiring might have slowed, with unemployment ticking up a bit, showing companies are playing it cautious. With all this going on, it makes sense that traders are stepping back before the data hits, said Gareth Nicholson, CIO of Nomura International Wealth Management. A weak report could pile on more market stress, mixing trade worries with job market concerns. As Trump's trade policies start to bite, the global economy's at a crossroads. The upbeat vibe that's been driving markets, especially in tech, is fading fast. Investors are now facing a trickier world, with unpredictable policies and economic challenges reshaping the road ahead. For now, markets are bracing for more ups and downs as they figure out what's coming.